Hey everybody, this is Greg Gossett from Gossett Trading and Mentoring Live, and today is Wednesday, October 23rd, 2019, and we are now again in the final hour of the trading day. As I mentioned each day, I am primarily an end-of-day trader. I prefer to make my trades as close to the closing price as possible. During the daytime, we have the algorithms, we have the day traders that are battling it out, and I consider those prices a lot of noise. I consider the prices at the close of the day the most valid prices, because then you have in the last hour of the day, and more specifically right before the end of the market, the large financial institutions, the market makers come in with size on their positions and move the prices to what they believe is the most important price, because those are the prices that they're moving them to, and therefore those are the prices I prefer to make my buying and selling decisions from, not during the day, not based upon the prices of the day traders and the algorithms. So anyway, I hope everyone's doing well today. I really appreciate everybody coming out, spending time here on this live stream. I hope that your time investment is paying off and you're learning more about trading principles, investing principles on this channel. So thank you very much. As always, guys, I really do appreciate it. Hey, it looks like Toby Petty's here. How you doing, Toby? Good to see you, sir, and thank you so much for coming. I appreciate it. I hope you're doing well, and if you have any questions today, you please just let me know, okay? So, all right. Well, excuse me. The Dow is down 25 points at the moment. The NASDAQ is, the NASDAQ is down 5 points, and the S&P is up a half a point. So fairly flat on the day. We were much higher earlier, but as the last couple days, we've had selling, buying in the morning and selling in the afternoon. So we'll have to see what happens at the end of the day, and then I'll make my buying and selling decisions from there. So, all right, Murit's here. Hey, how you doing, Murit? Nice to see you, my friend. Murit's our friend from Norway. Have you seen oil? Yes, I have seen oil. Congratulations, my friend. Congrats, and we'll take a look at that when we go through the charts. Hey, John Cortez, nice to see you. Thank you so much for coming by. And Jackson is here. Good early morning to Jackson in Australia. So looking forward to our one-on-one lessons this afternoon. We're going to do the podcast. We're going to go for a hike. I'm going to get a bit of dinner. And then Jackson and I are going to get down to it with our first lesson. So I'm looking forward to that. So, all right. Well, listen, the plan for today, as usual, is first of all, we're going to run the U.S. legal disclaimer. We're going to get that out of the way. We're going to come back. We're going to take a look at all my positions. We're going to talk about when I bought them, why I bought them, and more importantly, how I'm going to manage them going forward, either to the upside or to the downside. After that, we are going to do a few minutes on trader psychology. Trader psychology is very important. It's a skill that you have to develop, managing your emotions. So I like to do a few minutes on that, and I hope if you hear it every day, it's going to rub off and you're going to internalize it and using it in your trading. After that, we're going to go through all the stocks in my watch list, and we're going to analyze support levels, resistance levels. We're going to look at indicators such as RSI, MACD, moving averages, ATR channels. And the way that I look at trading, everybody, is when I look at indicators on the chart, I look at those indicators as groups of buyers. I don't really see lines on the chart. I see groups of buyers. And if you want a stock to go up, it's very important that you're in the company of other buyers. It makes sense, right? If you're the only buyer and there's no other buyers, probably not going up. So you need to be in the company of other buyers. And the way that I look at technicals is as groups of buyers. And so the more technical indicators that line up together at the same time, you have more buyers, in my opinion, and therefore you have a better chance of having a profitable trade. So we're going to go down through, we're going to look at the indicators, and we're going to see if anything looks positive for today. And if it does, I'll go ahead and place a trade at the end of the day. And if not, then, that's just good trading, is if you don't have anything to buy, you just don't do anything, right? So anyway, we'll go through, we'll find out if there's something interesting for today. And then after that, after the market closes, if you have any questions about anything I did today, you need some clarification, please don't be shy. Just type it in the chat and I'll do my best to clarify. If you have a particular stock symbol that you would like me to look at, I'm happy to do that for you, give you my humble opinion. And then if you have an interesting setup that you'd like to share with the group that you'd like me to take a look at before the market closes, put a couple asterisks next to the symbol so that I know it's time sensitive. And if I have time on my end, I will look at it before the end of the day. All right. So that is the plan, everybody. So thank you again for coming. And if you can, just hold on and I'll run the U.S. legal disclaimer and be back in about 40 seconds. So hang tight, please. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. All right. So we have some pretty big earnings after the bell today. We had some big earnings earlier this morning. We had Boeing, Waste Management. Boeing went up on the earnings and now it's giving most of it back. But today is a big day after earnings. Microsoft, Tesla, PayPal, Ford, eBay. And then tomorrow, of course, we have Amazon, Visa, Intel. So we have some huge earnings. Almost certainly it's going to affect the market in one way or the other. So, one of my trading principles and one of my rules is I never hold through earnings. It's one of the fastest ways to lose a lot of money in a very short amount of time. Now, of course, it's a way to make a lot of money in a short amount of time, but the way that I look at trading, I always look at my risk first. Protecting capital is the most important thing that you should do in trading, and making money is the second thing. But one of the very best ways to lose a lot of money quickly and to really bang up your trading account is to gamble in front of earnings. If you want to gamble, go to Las Vegas or Atlantic City or anywhere else in the country and do your gambling and get some free drinks, get a free buffet or a free dinner or a free show. At least you get something, but in the stock market you get nothing. Right? All you do is get a chance to lose a lot of money quickly. So anyway, should be interesting to see what happens today with Microsoft and PayPal. I think that's going to have a big effect on the tech market. So, all right, well, let's get to it. So first on deck is Russell 2000. So I did buy the Russell back here on the 15th of October. I bought it when we had a close back above the 200-day. 200-day is very important for moving averages and for a lot of stocks. And it closed just slightly above the 200-day, which I like, because if I'm wrong, the next day it closes even a little bit below the 200, then I'm out. And so it's very important in trading that you have asymmetrical trades where you can, if you lose, identify a support level, place your trade. If it closes below that support level, immediately get out, keep your losses small. And if it does go your way, then have the patience to hold on to it as it goes your way. And that gives you a good risk to reward ratio. So we were fortunate. I was fortunate in this trade. I did buy this here at 150, 139. It has moved up nicely since I bought it. As you guys know, I do phase out each day when the market moves a certain amount. Whenever the market wants to take shares from me, I give it to them. Not my whole percentage, but a small percentage. And that way it's easier for me to keep in the trade if it keeps going up. So you can see we bought here 150, 139 phased. I think two profit targets there, or two profit targets there. Last few days, it has just moved sidewards. No profit targets have hit. This is a discretionary trade, meaning that once it moves at least one ATR away from my entry, then I start implementing a trailing stop strategy. And at this point, my trailing stop strategy at this point would be if today we close below yesterday's low. Or conversely, if we came up here, rejected the third ATR channel, that might be a red flag. I might take profits there. If it just keeps motoring up and hits the 70 and rejects the 70, that would also be a signal for me to take my profits and lock them all in there. But as long as it keeps moving up, I will continue to phase out. Today, if we close below yesterday's low, I would go ahead and just lock in the profits. So anyway, good trade so far. Really good trade so far. The Qs. I did buy the Qs back here on the 11th of October. I bought this and entered a position here because the 5 EMA crossed over the 20 EMA, which is a good long-term back-tested crossover approach to the Qs. As with all my trades, I do phase out as it goes my way. So I did enter here at the end of the day. Next day didn't do much. Had a big day. Was able to hit 2 profit targets. Next day nothing. Next day it went up again, hit another profit target, then went down, hit another profit target. Did not hit one yesterday, and you can see today got close to this profit target, but it came off. So this is a completely mechanical trade. I'm going to stay in this as long as I have shares. If it continues to move up, I'll continue to phase out until I'm out of shares. If it goes down and the 5 crosses back below the 20 EMA, that will be my signal to exit. But even if it does come crashing down tomorrow, one of the reasons I like phasing out is I have taken some profits on a percentage of my total shares. Up here, the market cannot take that away from me ever. And if it does go down, it will mitigate my loss to the downside. So I mentioned to you yesterday, I don't like to look at this. I don't like the big bar yesterday on the high volume and the bearish engulfing bar. I don't like that we couldn't get higher than halfway of this bar here. So every fiber in my body wants to sell this. But my plan and my intention with this with this particular trade was follow my rule. My rule is stay in, phase out, as long as the 5's above the 20. If the 5 closes back below the 20, go ahead and get out. So I like to have different trading approaches, even though internally I don't want to hold this trade, but it is my trading plan. So I am going to go ahead and do it. But it's important to me, at least, to have some mechanical trades, some discretionary trades. I feel like it even things out over time. And if you do get a really big run, if you're in one of these crossover mechanical systems, you will take advantage of it. So anyway, that is the Qs. All right, so the SPY, the all famous SPY trade. So in case we have some new viewers today, I just want to go over this quickly. This is one, I was just talking about different trading approaches, discretionary, mechanical. Well, this is, a different type of trade. It has nothing to do with technicals whatsoever. And I do this every day. And the reason I do is based upon this back test. This is from Liz Ann Saunders at Bespoke Invest on Twitter. But with this approach, you have 2 options. Option number 1 is that you can buy the SPY at the open each day and sell it at the close each day. So buy at the open, sell at the close, buy at the open, sell at the close. If you would have done this every day since 1993, you'd have actually returned a negative 13.9% for your troubles. However, if you did the opposite every day since 1993 and you bought the SPY at the close and then sold it the next morning, so buy at the close, sell the next morning, buy at the close, sell the next morning, since 1993, you'd have actually returned a positive 634.2%. So not even close in which one has the better track record. The buying at the close, selling in the morning definitely has the best track record. I've been doing this since February 26th, and it has been very, very profitable, I must say. And what's interesting about this shows that all the gains in the stock market, in the S&P 500, since 1993 have actually come in the after hours, people bidding it up in the after hours and bidding it up in the pre-market and then selling it into the open. That's what this graph shows. So the blue line's the buy in the afternoon, sell in the morning. The orange line is the buy in the morning, sell in the afternoon. And which one has worked out better? So I do like this graph. It shows that even if you have a really good trading approach that has a quantified back-tested edge, in the long run, it works nicely for you. In the short run, anything can happen. So you want to keep that in mind. You want to position size correctly, and you want to play the long game of trading, everybody. Think about trading in the long term. Don't think about how I'm doing this day, this week, this month. Think about how I'm going to be doing, in the next year, 2 years, 5 years, and find an approach that has a good quantified edge, and realize there's going to be ups and downs. One trade is just, the trade you make today is just one trade of the next 1,000 trades. You don't have to put too much energy and emotion into it on the outcome, because if you have a good positive back-tested edge, it will play itself out in the long run. So with that being said, I did buy the SPY yesterday at the close at $299.01 and sold it this morning for $298.74. So about a 26 cent loss per share, no big deal. Yesterday I hit an all-time high using this approach, but today having a small loss. But like I said, not a big deal. It's been very, very profitable since I used it. But like that chart I just showed you, right? We could go down for a month. In the month of May, I lost about 80% of my overnight SPY trades. It wasn't fun, but think about that chart in the long run. At least now, no guarantee in the future, but there are normal drawdowns. It's just normal part of trading. But as of yesterday, like I said, hit an all-time high in the P&L just on this trade alone. So anyway, small loss overnight here. I will be buying this again at the end of the day and selling it first thing tomorrow morning. Okay, so let's take a look here. Walmart. So I have not had a lot of short trades since I've been doing this podcast, but this one did look really good. I did take a short trade on this yesterday. It's worked out nicely. But the reason why, and just to get a little more detail in here, I learned this studying one-on-one with Dr. Alexander, but you see the high we have here on this move? See this high? Well, I consider this whole move here. You see how high these bars are? This is momentum bars. This shows momentum of a move. And then here we have the high, but I'm going to take the high bars as my measurement. So here we have a high. Here's the high bars. We have a sell-off. Now we rally back. We make a higher high than this, right? We make a higher high, but look at the little green bars here. Look how short they are, right? Compared to how strong they were up here. So this means that this second move up, even though it went higher, had a lot less momentum. And that is a bearish signal, right? So anyway, so it went up. I didn't immediately short it. Then it went down. I didn't short it here either. Then we had 4 days ago, we had this big move down. This is a lower high from this high. Then yesterday, and a big bar, larger than 1 ATR. Then the next day we rallied only to about halfway of this bar. And whenever you have a big down bar, big outsize, larger than 1 ATR bar, hitting that 50% mark of that bar is where you're going to find some resistance from a Fibonacci standpoint. I still didn't take the trade, but yesterday we had this V1, right, that triggered about the halfway of this bar. So this bar attempted to rally, we attempted to go up, then it triggered a V1 to the downside. So it had all the components that I needed for a short trade. High, sell off, higher high, MACD bearish divergence, lower high with a big bar, move back up, and then a V1 entry to the downside. So I did short yesterday here at 119.57, and it's worked out nicely. Did hit one profit target, took about close to 19% of my shares off. So lock that profit in. If it goes zooming up, the market can't take away the profits on these shares anyway. Going forward, I am going to be eyeing the 50 RSI to the downside. If we get down to the 50 and then bounce back over it, that would be my signal to go ahead and just lock in profits on this short trade. If it closes below the 50, I'll continue to hold it. Obviously continue to phase out as it hits my profit targets to the downside. Right down here is my final profit target. So if we get down to this point, I will run out of shares. But anyway, so far so good. Pretty nice trade. And like I said, have not had many. I think up until yesterday, I had three short trades total in this podcast. And I think made profit on 2 of them, lost on 1 of them, but now looks like we have a total of 4, and it looks like 3 out of 4 have been profitable so far. Knock on wood. We have no idea what's going to happen, but I am glad that we did hit a profit target here. So anyway, this one's good. It's nice to have a little diversification against the market in case something happens, and it's even nicer to have a position that is in the money. It makes it easier to hold it. It's always better to have profitable positions. It's less stressful on the way up, because if it does go up against you, it's just profit that you had. It's not starting out as a loss. So anyway, that is it. That is it for today. So let me take a look over here. Hey Jesse, how you doing? Good to see you, my friend. Thanks for coming. Oh, John says, how do you choose which stocks to put on your stock lists? So John, the watch list I have, I like the list to be diversified. Well, I should start off with saying I really like only large cap stocks that that Wall Street is aware of, that they follow them, with indicators. Technical indicators, one of the reasons, in my opinion, that they work is because people see them and they react, just like I was saying earlier in the show, where, looking at indicators as different groups of buyers coming in. So I want stocks that are really watched and followed by Wall Street. I don't really want to trade JC Penney or the Gap or something like that. I want big, well-known, large cap stocks that have a lot of liquidity, that are followed by Wall Street. And then going forward on that basis, then I like to have a variety of different types of stocks, the large auto stocks, some of the large technology stocks, some of the large, indexes, of course, like the S&P and the Qs and the diamonds, and then the big monster stocks like Amazon and Google and Apple. So that is how I pick, large tobacco stocks, large automobile stocks, large healthcare stocks, right? So that is how I put together my watch list. Sometimes I'll take something out. Sometimes I'll put something in. I like to have gold and silver in there. I like to have oil in there. I like to have a variety of different stocks. Of course, I don't want a whole watch list just of technology stocks, right? Because one technology stock is most likely going to act like a lot of other technology stocks. So I want a diversification. So I hope that helps, John. Hey, Kurt, how you doing, my friend? Good to see you. Kurt says, Jess, thanks for the script. Work like a charm. Okay, good. I'm glad to hear that. Those guys are trading some scripts back and forth for their charting program. So, all right. Let me just check real quick. All right. So listen, this is the part of the show where I do like to do a little bit on trader psychology. It's so important, everybody. How you manage your emotions. When I say trader psychology, what I really am saying are emotions. How you manage your emotions, whether you're making a lot of money or losing a lot of money, or just going sidewards and getting frustrated. How you manage the emotions is the number one indicator to me on how you're going to do long term as a trader. If you go into a losing streak, you go into a drawdown, and your emotions get the best of you, and you don't follow your rules, you're in trouble. You are in trouble. So it's very important to keep your psychology, your mental stability to be stable, right? And be aware of those signs, be aware of those triggers of, oh, am I feeling frustrated? Am I going to make a bad trade? Am I going to buy too much of a position because I'm frustrated, right? Or am I doing really well, so I have no fear? I'm going to buy larger positions because I feel like I can't lose. Can't do that. You have to always keep it smooth, simple, stable, regardless of what's happening. So I do like to go through Twitter. There's several really good Twitter channels out there that kind of specialize in putting out good trading words of wisdom, if you will. And one of them is Rainer Teo, and he has a great channel at Rainer _ Teo on Twitter. He puts out great information, great trading words of wisdom. So if you guys haven't followed Rainer Teo on Twitter, you really should. But Rainer says many traders make the mistake of trying to find the best trading strategy. In reality, it's about knowing yourself so you can find the best strategy to suit you, right? And if you're new to trading, you might think, yeah, but I just want the best strategy. Well, there is no best strategy. There's a best strategy for you, right? I mean, imagine if you just can't stand the thought of holding a position more than 2 or 3 days. You just can't stand it. Well, then I could give you the best long-term trading, trend trading approach, and it wouldn't work for you, right? Because you don't want to hold something for that long. And if you don't want to hold something for that long, there's plenty of other trading approaches that are more short term, right? But imagine, on the other hand, if you like holding things for a long time, and I give you a really good short term approach to trading, that's not going to work for you either, right? So you really have to do some deep thinking about, am I comfortable holding something long term? Am I not comfortable holding something long term? Would I rather hold something short term, or would I rather hold something long term? And do I want to trade all day long like a day trader, or do I want to trade at the end of the day like Greg, right? I mean, there is no right answer. I have my opinions on it, but you really have to find an approach that works best, fits your personality as far as how much time you want in front of the screen, how large your position size are, what your holding time is. And I really think that Rainer is correct, guys, that you have to find an approach that works with your personality, that jives with your personality. And if you can find one that makes sense to you and feels right, you have a much, much better chance of being a profitable trader than somebody just giving you or teaching you something that doesn't really feel right with you emotionally. So anyway, thank you, Rainer Teo, and I thought that was helpful. And if you guys have, if you're feeling like maybe something's not jiving with you, ask me in the live chat, right? And maybe we can put something together that works better for your personality. But do some deep thinking about it. How much time do I want to spend in front of the screen? What's my position size going to be? How long do I want to hold positions? So think about that. And when you figure that out, then look for the trading strategy that fits that. And I think you'll have a much better chance. Okie dokie. Jackson says, glad you have the wooden coffee table, my friend. You might be knocking on it a few times over this podcast. I'm suspicious. I think a lot of traders are suspicious. You know what I mean? So I knock on wood. I can't help it. So, all right. Well, let's get going down through the watch list here. Oh, Jesse says, unless you're sitting on $25,000 minimum and you want to be a trader, better warm up and hold positions. Yes, that's a very good point, Jesse. And it also depends on, how much capital you're using as well, that is definitely a factor in what kind of trading approach, right? Whether you're phasing, whether you're not phasing, how many positions that you're going to take. Um, up until recently, your commissions was a big factor as well on how you're going to design your trading approach. But luckily, I don't know, it still seems weird, right? That there's no commissions on trading, but I tell you what, it allows smaller traders a lot more flexibility in the type of approach they're going to use. Okay. Well, let's get started here. Apple. This thing is a monster. Just keeps moving up, right? We have earnings coming up here on the 30th, so the end of the month. We have earnings coming up. This is just way too high for me. 90% of stocks stay below the third ATR channel. That's this thick line. And they stay above the negative third ATR channel. So, I like to buy ideally in the value zone down here. Once it starts getting up to the third ATR channel, that is kind of where I want to start thinking to sell. But I definitely do not want to think about buying up here because 90% of prices do fail up here. But every once in a while, you get a really strong one that just keeps on going, and that's what's happening with Apple. So no position for me here, no entry for me up here. I'd like to see Apple pull back, some kind of dip into the value zone, look for a V1 or a V2 entry. That is the most likely next new signal for Apple, is some kind of pullback into value and a V1, V2 entry. And maybe we'll go back up and revisit the top, but who knows? Maybe it'll just keep going. And that's how it goes. There are a lot of trades where you're looking for a pullback that you'll never get, and you just have to be okay with that. But on the bright side, there are a lot of trades where you will get the pullbacks you're looking for. So any of you guys have Apple, congratulations. That's really going well for you, making new highs almost every day. So congratulations. Adobe, we're at a 3508 RSI. We had that big down day yesterday. We did try to rally today, but it failed pretty close in that 50% Fibonacci halfway of the large bar. So nothing here today. This is not a good indicator, price bar indicator right here, where we go up and then give it all back and come back down. I would be looking for some kind of dip buy on Adobe, probably down in here, where we'd have a convergence of the 30 RSI and also the negative third ATR channel. Remember what I just said, 90% of prices tend to not go below here. So if I can get a really good risk to reward ratio, if I'm close to the third ATR channel and also have the support of the 30 RSI underneath me. So just want to be patient, wait, might just take off and I'll miss it. And if it does, that's okay. There's other approaches to getting back in this, like the 10 crossing over the 50, so forth. But right down in here would be a sweet spot on Adobe, but it's not quite there yet. Okay. AMD, well, AMD has moved up nicely. You can see we went over the 1 ATR channel. We almost, within pennies, pegged the third ATR channel up here. This has been a nice move. Having a pullback here would not be surprising. It wouldn't mean there's anything wrong with the chart. Ideally, I'd like to see it come back between the 1 and the negative 1 ATR channel, somewhere in this range, for me to buy. Anytime it's above the 1 ATR channel, I consider it overbought. When it gets to the third ATR channel, I consider it extremely overbought. So I do not like to buy stocks when they are above value, over the value zone, or how I look at it, overvalued, right? I want to at least buy it back in the value zone at proper price or lower. So nothing on Advanced Micro, waiting for a pullback into the value zone. Amazon, wow. Well, this is a tough one. We moved outside of the value zone. We came back into the value zone. We bounced. We made a lower high. If you make a lower high, then you have to wash out the previous low, which that did that today, actually. And now it is working on a V1. This bar is a little larger than one ATR channel, so it's something I really can't take here. It's above the 50 RSI, it's above the 10, the 5, and the 250, which is good. But then again, you know, we have earnings tomorrow morning. We also have Microsoft earnings after the bell. So, you know, if this did trigger a V1, it would be legitimate for a V1 entry, especially over the 50 RSI and over the moving averages, for sure. I know that the Microsoft earnings probably gonna have a big effect on this as well. I have the Qs already, so I'm probably just gonna let this one go because I do have some technology exposure. But if this did close above 1765.73, it would be a legitimate V1, and it did wash out this previous low, which is good. But then, you know, if you did buy it here, then basically, you know, tomorrow afternoon is Amazon earnings, and which in my situation, I couldn't buy it. So if you bought it here, you literally have to buy it for one day. If you don't hold through earnings. All right, so Boeing, you can see we did have earnings. We bounced up we went up nicely. Then we came almost all the way back down. It's up $2.19 at the moment. It's at a 32.62 RSI. So, you know, if I were to buy this here, use a 30 RSI below me as my stop, I would have a pretty good risk to reward ratio. But I don't like how it rejected this third ATR channel here at all, and we still have this big day behind us. So I'm just gonna wait on Boeing and see if I can get some kind of better setup where I have more signals coming together at one time. Caterpillar. Take a look here real quick. Caterpillar did have earnings, up nicely on the day. Just too high here. Very strong. That's closing above the third ATR channel. That is quite strong, but not a good risk to reward for me at these levels. I needed to come back into the value zone for some kind of V1 or V2. The Dow, well, you know, we moved up. We move back down into value. We're moving sideways. This is all good, but really I need a V1 or V2 for me to get interested. Looks like today did take out yesterday's low, but definitely not by a quarter ATR, so nothing on SPY. Disney, well, down today. We did reject the 50 RSI, if you guys remember, not the 50 RSI, but the 50-day moving average downward sloping. So this was a little concerning to me when it rejected that downward sloping 50. So anyway, nothing here. Did make a new high. Like to see it stabilize here in the value zone and look for a V1 or a V2. Etsy. Well, we went above the value zone. We came back into the value zone. We were kind of moving sidewards here. I'd like to see the bar stay narrow, look for a V1 or a V2 now that we're in the value zone for an entry to get back in. Ford, strong day today, moved up above the 200, but it does have earnings today at the end of the day, so really can't buy anything here. I wouldn't buy it here anyway. It's almost close to the second ATR. Facebook, we had that big strong down day yesterday. This bar is larger than one ATR. Today's bar, you can see, got rejected by about halfway of that big down bar, which happens a lot. So nothing on Facebook. I mean, we were above value. Now we're into value. If we could go sideways for a couple days, look for a V1, V2 in the value zone, that would be a potential entry for me. 5 below. above value, back into value. You know, I like that it's way down here in the value zone, but I need to see it move sideways. I need to see some stabilization in the price before I would get interested. Here you have a higher low V2. Problem is this bar here is larger than 1 ATR, so with the signals that I use, I can't take this. This is a V2. Here's day 1, day 2, day 3. Day 2 washes out day 1. Day 3 today looks like it's going to close above day 1's close, but day 1 is larger than 1 ATR. And look at this big bar. See how we got right to about 50% of that bar, and that's smack dab where we ran into resistance. So nothing there today. Gold, gold had that big run up. We've been moving sidewards, which, is good. It's finding buyers and sellers. It's moving sidewards. Whenever you have this kind of consolidations, this sidewards movement, chances are this thing is going to move, right? One way or the other, up or down. We just don't know when, and we don't know in what direction. But I have to wait for a signal. My signal would be a 5 EMA crossing over the 20 EMA. So that is what I'm waiting for on gold. Google, nice day today, moving up nicely. It's up over 1% today. We did have right here back on the 21st of October, we had a 10-30 SMA cross, which is a good back-tested approach to long trading Google long term. The reason I didn't buy it though was we were over the 1 ATR channel, and I decided I was just going to pass. I don't really like to buy things outside of the 1 ATR channel. With crossovers, maybe up to the 1.5 maximum second ATR channel, but I just didn't like it, so I didn't take it. But it is moving up nicely. So if you guys have Google, congratulations, that's working nice. Goldman Sachs doing really, really well. We had this 520 EMA cross back here on the 16th. At the same time, MACD went positive. So this one is working nicely, really, really nicely. So if any of you have Goldman Sachs, congratulations. It's moved up fairly nice since that crossover. So, if I had taken this trade and now we're moved up like this, I would be looking for some kind of exit to the downside, some kind of trailing stop. IBB rejected the 200-day, also rejected the third ATR channel. Big day yesterday, reversal bar. Close was higher than the previous day's close, but the close was lower than the open, which is generally a little bit of a bearish bar. So nothing there. Intel moving into the value zone. I need some kind of sidewards movement, V1, V2 entry. Russell, we have, of course, we bought over the 200. It's moved up nicely for us so far. No profit targets yet today. Johnson & Johnson, big down bar. You can see yesterday we got to close to halfway that bar, and that's where it found resistance. So nothing there. Coca-Cola, boy, gapped up on earnings, went down, went back up. No V1, V2 here. I definitely wouldn't want to buy this close to the 1 ATR channel. But anyway, it looks pretty good so far. Lockheed Martin, I was considering buying Lockheed Martin yesterday when we got close to this V1, but it didn't quite trigger. So we would have a valid V1 today. Let's see, close 374.05. So if it closed at above 374.05, I would consider buying this because it would create a V2. So let me just quickly do some numbers on this. All right, so that's a possibility for today with the V2. MasterCard, I don't know what's going on with my chart here. There's a bad tick that got in there yesterday, so it looks like it's up $57. It is not. It is up, or it's down 53 cents. So, if we look at it over here, MasterCard, we had that huge down day yesterday. Currently, we're at a 37.45. What I'd really like to buy on MasterCard would be under the 30 RSI, back over. That is what I would be looking for, but not quite there today. And if we do that, we may also have a convergence of the 30 RSI and the 200-day moving average. So right down in here, I think would be the sweet spot to buy MasterCard. So it's not quite yet there yet, though. All right. Give me a second. Let me just redo that chart there. Wait till that comes back online. All right. McDonald's is kind of interesting here, and I'll tell you why. Of course, they missed on earnings, or the market didn't like what they had on earnings. We did bounce off the 200-day moving average today, and we did literally tag the 30 RSI. So, you know, the way I view this is I have support of the 200 underneath me. I have support of the 30 RSI underneath me. Does it mean if I take the trade it's going to go up? No, it doesn't. But what it does mean, it offers me a good risk to reward ratio. So it does look like I will be going ahead and buying a position of McDonald's, because if I'm wrong, theoretically I can be wrong small. If I'm right, you know, I might have all the way back up to here as my reward with a theoretical small loss right under the 200 day. So I do like the confluence or the combination of bouncing off the 200, bouncing off the 30 here, right here at the same time. So I look at this as two levels of support underneath me that have been tested. The 200 has been tested today, the 30 has been tested today, so it offers me a really good risk reward. So I do very likely, as long as it holds above the 200, I will be buying McDonald's today. How are we doing on time? Okay. Altria, it's just a monster, just keeps going up and going up. It's just way too high for me to buy here. I need a pullback for me to get interested. Merck, we had that big down day tomorrow, yesterday, and then we're up big again. We're up about halfway from where it actually not opened, but the previous day's close. So this bar is actually about this big, so a little bit higher than 50%, but I would expect this is where it would have issues from a Fibonacci standpoint. So nothing on Merck. Microsoft, we have a V1, but it's up against this really large bar. They have earnings after the bell, so I can't touch it. Netflix, really nothing here on Netflix. If tomorrow we had a spike to the downside and reversal, we'd have a nice V1 with 2 days of sidewards movement, but nothing there. Nike, big down day today. You know, I've been talking about Nike being above value, above value, above value. I want to buy it back in value. Well, now it's back in value, right? But I would need this to move sideways, look for a V1, V2. Philip Morris just keeps cranking. Just way too high for me. PayPal did bounce off the third ATR channel earlier, did bounce off close to the 30, but it has earnings today, so I can't do anything with that. Q's doing pretty good. Who knows? Might hit one of our profit targets today. That would be good, right? SPY, small overnight loss. I will be buying this again at the end of the day. Bonds, really like, I'm interested in bonds. If we can get to a low RSI, maybe come down here, hug the 100 ATR channel or 100 day moving average, have some kind of V1, V2, give me a good risk reward ratio, but nothing on bonds yet. Tesla also has earnings at the end of the day, so I can't get involved with that. Twitter did recover nicely. However, Twitter has earnings tomorrow, but they're before the bell. So, you know, if you don't want to gamble on Twitter and you have Twitter, then you'd have to sell it now or at the end of the day so you don't run into earnings tomorrow morning. United Healthcare down a bit today. It's too high above the third ATR channel, way too high. I need a pullback into value. Look at oil, everybody. Huge day. I was looking at buying oil here on this higher low V1 back here on the 21st. But if you remember, I had it all queued up. I liked MACD was positive, but it didn't close above the previous day's close. It closed a couple pennies below, unfortunately, because that would have been a super great trade. But, you know, you have to look at when stuff like this happen, go, well, at least I followed my plan. I didn't buy because I didn't get the signal. And, you know, don't look at these kind of trades and go, well, last time it worked out, right? Don't do that. Don't think, well, last time it didn't really trigger, but it worked, so I'm going to do it again. You know, these things work over time because if I took this trade 100 times with it not confirming, I doubt very much it would win more than 50% of the time. But if it closed above, then I'm pretty sure it's going to win somewhere, you know, 60, 65% of the time. So VIX had that V1 yesterday bounce off the third ATR channel. We are coming back down today, but we're holding the halfway of this bar. So I'm not going to do anything here with VIX, but it's holding. A lot of what VIX is going to do is going to be based on this afternoon. Verizon too high. Walmart has rallied off the low, so I'm glad we did take the profit target down here when it happened, but still down today. So just going to manage that going forward. Energy strong. Financials strong but too high. Real estate big move up. I'd like to see a move back down into value. Utilities bumping up against the 1 ATR resistance, and healthcare. So our potentials for today, or my potentials for today, Lockheed Martin possibly with a V2 if it triggers. And I do like McDonald's down here. So McDonald's looks very, very likely for me to buy. As a matter of fact, okay. Hey, Steve Burns, how you doing, my friend? Nice to see you. Thank you for coming by. It's always an honor, Steve, to have you here. Appreciate it. I'm always excited when you're here. I know everyone else is. Steve says, looks like the market is on pause for earnings in the Fed. Yeah, I mean, you know, the rest of this week we have major earnings and then we have the Fed announcement. So, you know, there could definitely be some volatility there. But thanks, Steve, for coming by. Appreciate it, my friend. Jackson says, Greg, off subject, but have an indicator to know where RSI will be at future price, so should be able to do the phasing out strategies. Okay, we'll talk about that tonight. I don't think you quite understand the formula for the phasing out yet in regards to that indicator, but once we go over it, I think I'll put it together for you. But until you know that, I think you're looking at it differently than I do. But it's good that you have that. But we'll go over that. We're going to talk about that tonight on our first lesson. Bing He, how you doing? Good to see you, my friend. That's our friend from Singapore. Mount Doji, hello. Would love to hear your thoughts on a V1 engulfing on CONN. Well, it is a beautiful engulfing, and it is a V1. But honestly, I don't think I would take the trade here, Mount Doji, because we're over the 1 ATR channel. We're at the 60 RSI. Probably would I don't think I would take it. I'm not saying don't take it, but just me personally, you know, this is very bullish, extremely bullish. But the people that bought down here probably very, you know, licking their chops because they made a huge amount. Now, it might just continue up, but the way I would approach this is if we had a day or two pullback, even without a V1 or a V2, if we had a day or two pullback, then it would give you a better risk because it would reduce your risk if you could buy it lower, and then that would also increase your upside. So Me personally, I don't think I would take it, but it is very strong in, long term this is strong. Looks strong to me. But in the short term, I think it might be a little overbought being above the 1 ATR channel, having this resistance here. Sometimes what I do on this, I'll take a half position here and then I'll wait for another half position if it backfills a little bit. So that's my take on CONN. Jackson says, do you display the 30 SMA on some charts? Yes, I do on some charts, on some of my crossover charts, but on my main chart, I don't, because otherwise I just have too many. Like if I go over here to Google, here's my Google crossover chart. Then, yes, I have a 10, which is the purple, and I have 30, which is the gray. But if I try to put everything on one chart, then it just looks crazy. So I have multiple charts. But yes, I do. Does triple bottom bullish on GDX with the V2 make it any more appealing? RSI at 44.66. Yeah, it does, Jesse. I mean, yes, you do have a triple bottom with 3 divergences. But I don't like that big bar for the V2. All right, I got 4 minutes. Sorry, I'm going to have to get things going here, but I'll get to the rest. I'll get to the rest of the questions for sure after that. Lockheed Martin does not look like it's going to. McDonald's. Yeah, I do like McDonald's. Gives me a good risk to reward ratio. I have the I have the 30 and the 200 underneath me. All right, what do we have? 3 minutes. So I do like this. It does not mean it's going to be a positive trade, right? But it does mean that even if we close 1-2 pennies below the 200, I will get out. You always have to risk something to find out what's going to happen. But if I'm wrong, theoretically, I can be wrong small. If I'm right, I can have 2, 3, 4, 5 times my risk amount to the upside if I'm right. So IWM is fine. Q's not quite there on the profit target yet. We'll be buying the SPY at the end of the day, and Walmart has, boy, I'm glad I took took it off down there when we had the chance, right? So still profitable trade, still down on the day, but it has rallied a bit. All right, I got about 2 minutes. Let's look at core. See, Mount Doji, this bullish engulfing V1 here was much different than the one you just had me look at. Con, because this one happened in the value zone. It has a lot more potential. Your con one is right up about here now, but what a great trade Mount Doji had on this. This was a great setup. Bullish engulfing, V1, washed out that low, rejected the 1 ATR channel, moved up nicely. I'm pretty sure you still have some of this, so congratulations. That's very, very strong. All right, so I better turn my attention here. I have 1 minute left to McDonald's. Lockheed Martin doesn't quite look like it's going to. So I will be buying SPY at the end of the day. It's at $299.86. It's been having a problem with that $300 price. We'll see if it's able to close over or not. All right, I'm going to go ahead and just buy my McDonald's. All right. So I bought McDonald's at 198.72, and I bought Spy at 299.88. All right, so we got McDonald's here at 190. 198.72. Okay. Well, that's a good start. That's a really good start. It's 199.10. So that's great. And then we got Spy, our new Spy, at 299.88 for our overnight position tomorrow. All right. Guys, if you could give me about 20 seconds, I'm sorry. I have to move the dog around, then I'll come back for questions and answers. Give me about 15, 20 seconds. I'll be as fast as I can. Okay, all right. Sorry I couldn't get to all the comments there. There was just a lot to go through, and I was running out of time. But listen, before I do the answers, I just want to hurry and put my quick plug in for the day. And as you guys know, I do offer private one-on-one coaching, teaching, and mentoring lessons in the evening time via Skype. I've had really good success with my clients. What I do here on the live stream, I hope is helpful, but the live lessons, the interaction between us, you're going to learn, I promise you're going to learn a lot more. You're going to have a lot deeper understanding, because what I do is I teach, and then I flip it around and have you teach it back to me. And if you don't really know it, you won't be able to teach it back to me. So I'll keep on teaching you until you do. But I do offer a course. It's 10 hours. It's 5 2-hour live sessions, just you and I, teach you everything that I know. And like I said, I've had really good success with my clients. They understand it on a much deeper level. I put together a complete trading approach for you, position sizing and technicals and price action and the psychology standpoint. But if you're interested, let me know. The price for the course is down in the description of this video. My email is also there. You can email me, and or you can send me a message on Twitter. But generally what I like to do is I kind of like to have a little double interview. You can interview me, I interview you, just to see if we're a good fit. And it's totally free, and it's on Skype. So if that's of interest, reach out to me and we'll set that up. Just got done with a few students last week with teaching, and went really, really well. And then actually Jackson and I have our first call this evening, so I'm really looking forward to that. So if it's of interest, you want to have that Skype call, please reach out to me and we'll set it up, and there's no obligation. I promise you that. So, and then lastly, if you found today's live stream helpful, if you find this channel helpful, if you would subscribe if you haven't, or at the very least, if you could hit the thumbs up button. It does help Google promote the channel out to more people. I get a lot of emails from people saying, Greg, thanks, appreciate the channel, it's helping, glad I found it. And if you can hit the thumbs up button, it helps Google get it out to more people, and we'll get more people here and hopefully help more people. So anyway, I would appreciate it if you would do that. Okay, done with that, and then let's take a look here. So back to Jesse. Does triple bottom on GDX with the V2 make it any more appealing? RSI is 44.6, so not much room to 50. Also, Greg, could you take a peek at TSN triple bottom 32 RSI rejected? Yeah, that sounds good just from the sound of it. Shoot, this is one of those charts. So, oh no, it isn't. Well, let's take a look, see here. Well, there is a lot going on here. I mean, we do have a bottom, we have a rally, we have a lower low. This is close to halfway of this, maybe a little bit more. It's a 31.89 RSI. I haven't really seen much of a bounce here though, like it closed on its low. I honestly would give this one more day, Jesse. I would like to see it go under the third ATR channel and back over, and under the third ATR and back over, because it's been closing on its lows almost every single day. Let's take a look at the weekly chart. Weekly chart, it's lost the one ATR channel. I would be patient with this one because this one looks fairly bearish and hardly any bounce in here whatsoever. But I would give it one more day, see if we could test under 30 back over 30, or under the third ATR channel back over the third RTA channel. So that's my opinion, Jesse. Oh, and then right below you wrote, would just need an entry signal. Yes, you're 100% right, Jess. Great analysis. The setup's there. Big picture, it's looking good, but there's a difference between big picture and a setup than an entry. You need the big picture, you need the setup, but to get into the trade, you need some kind of entry signal, and that entry signal would be the under the 30 back over, or a V1, something like that. Murray says, Greg, actually crude oil price that day crossed it. Since USO is not the actual price, it is not 100% mirroring the oil price. Yeah, because it's an ETF, but since I don't trade futures, I have to go off of what I have on the charts. And right here, I was looking for that V1. If you guys remember, I had it all queued up. But it didn't close. This day didn't close above, and unfortunately it didn't. Otherwise, I would have been able to get on board with this, which would have been pretty sweet. But you did well on oil, so congrats, bud. Mount Doji says the candle is pretty big on con. It could easily pull back, so I did not trade. Okay, well, I'm glad to hear that, because I mean, of course, it might just go cranking up, but it is a little big. It's a little chasey, especially in regards to where it is with the 1 ATR channel. It closed above, which is good, but now you have this right above. But I think a little backfill would be the way to go if I were trading this. I don't think I would have bought it here, and it might just continue, but I think I would look for a little. I wouldn't want to see if it went down tomorrow, Mount Doji, like in here, I'd like to buy it. If it closed under the halfway of this, I don't want to buy it. Remember, this halfway, this big bar here now should hold support at the 50. But if it loses the 50, that's a bad signal. Because remember, if you would have bought it here today, you'd get out at the halfway of the washout bar, and this is the washout bar. Jackson says, all good regarding RSI. was more the ability to see where the stock will be at the 70, 30, etc. But chat with you. Yep. Yep. We're definitely going to be talking about all of this, Jackson, for sure. 70, 50, I mean. Okay. Oh, yeah. Well, actually, the three important ones on RSI are 70, 50, and 30. So, I mean, I do it manually on the RSI. I do it manually, but yeah, I mean, if you can get the chart and the script to do it, then fantastic, right? I mean, like here, this blue line, I do it manually. I put it here so I know where the 50 RSI is. But, if you have a script that's going to plot that, that's fantastic. Bing He says, Greg, hi Greg, when would you check on triple screen? I notice you don't check most of the time. Well, I just kind of know, like on Lockheed Martin is a beautiful triple screen, right? The monthly, the long-term, up nicely. The long-term move is up nicely. The intermediate term is in value. That's good because, if you're in a long uptrend, a lot of times it will come back to value before it will move up. So in the long-term chart of the monthly, it's up. On the weekly, it's in here, which is probably a pretty good place for it to start to bounce. That's why I go to the smaller time frame and look for an entry, right? So you don't get a lot of triple screens. I mean, Lockheed Martin is one of the best triple screens I've seen in a long time, and so that's why I pointed it out a couple days ago, but I still need a signal now. But of course, on anything that you're looking at, you can check on the triple screen for long-term uptrend in the monthly, in the value zone on the weekly, and look for the entry on the daily. I hope that helps, Bing He. I'm not sure if that's what you were after. Murat says, I sent the Brent oil chart in ATR channels like yours, Greg. I just realized that there's actually very nice V2 since I am still looking on hourly chart. I didn't see the V2. I am still long. Take a look here. So these are hourly charts? No, these are daily charts. I sent the Brent oil in ATR channels like yours. I just realized that there is actually a very nice V2. Yes, there was a V2 yesterday. Yesterday was a higher low V2. Good one too. Which is good. Oh, okay. You didn't see it because you're looking at the hourly. Well, that's good. That's fantastic. That's a beautiful higher low V2. Yeah, this is daily. All right, let's look. All right, so it looks like Ford missed earning or lower share slide on lower guidance. Yeah, down 2.5% after hours. Microsoft is down after hours as well. Well, all right. So not bad today, actually. Um, IWM was up, Qs were up, Walmart was down, so and then SPY was down. So 3 for 4 today. Not too shabby. Not too shabby at all. I'm happy with that. Be just going to be interesting to see what happens tomorrow with everything. So what else do we have today? So today's Microsoft, Tesla, PayPal, eBay. So those are some big ones. All right, does anybody have any other questions for me? If you do, let me know and I will do my best. Looking over your question, Jackson, so when it comes to phasing out, it has nothing to do with RSI, actually. Getting out of your entire position has something to do with RSI, but I'm going to show you all that. But as far as your phase out prices, it doesn't have anything to do with RSI. So it's going to be helpful to have that RSI indicator on there for sure, but it's not directly related to actually phasing out. Murat says, if Amazon comes strong, is it good for Walmart or bad? I don't know. I would imagine it would be good. I would think, Murat, wouldn't you think? If Amazon comes strong, that it would be good for Walmart. I mean, they're both in the retail sector, so if things are good for Amazon, I imagine they're fairly good for Walmart too. But you never know. That's the difficulty is trying to figure that stuff out because it can really surprise you sometimes. Maybe Amazon's doing well and that comes at the cost of Walmart. But if I had to bet one way or the other, I would say if Amazon's good, it's good for Walmart. Hey, you're certainly welcome, Jess. And way to go finding that. What was it? TSN. Yep, setup's good. It's not quite there yet, right? It's not quite there, but the setups is there. We just need an entry. And you're certainly welcome, Jess. Hey, Johnny, what's up, my friend? Good to see you. No trading stories for me today, John? I know you got out. I know you got out of UNH, and that was a monster for you. Do you have anything else? Johnny always has these great trades, really, really monster trades, huge percentage it seems like. Let's take a look. Oh, Microsoft did come out with earnings already. Beats on revenue and earnings, stock is little changed. So Microsoft is actually down 40 cents on earnings. All right. Jackson says, thanks. Reveal all at 6:30. Not all. We're going to do it in sections. We're going to do it in sections, 5 sections. We will reveal 1/5. Johnny says ALXN overnight for 8%. Are you serious? ALXN. Did you really, Johnny? From recommendations here. Oh, was it the higher low V2 on ALXN that you took? That looks like something I would take right there. I don't follow Anyway, fantastic. Way to go, my friend. Oh, you held through earnings. That doesn't count. You held through earnings. That doesn't count. I would not have been able to participate in this, but I'm glad it went your way, bud. Merritt says, thanks, Greg, and all. I have to take my dog out. She's been jumping up and down. I think she's got this habit from Greg's dog. I'm telling you, right at the end of the day, as my dog starts, they're on the same wavelength, so she has me well trained. All right, everybody. Well, listen, Jackson, thank you for coming by. Thank you for your comments, and looking forward to our call tonight. Just Skype me when you are ready, and looking forward to getting started and getting down this road. Johnny, thanks a lot. Congratulations on your ALXN trade. Nice going. Oh, Johnny says, I think it was Robert here that mentioned it, but I was prepared for a slump. Yeah, I mean, it's a nice V2, higher low V2. I mean, that's perfect. Perfect. But the earnings thing, but I'm really glad it worked out for you. But Johnny, thank you, sir. Appreciate you coming by. Congratulations. Jackson, talk to you later tonight. Thank you. Jesse, good to see you, sir. Thanks for everything that you do. Be safe out there, and let me know if you have any questions. Okay. Merritt, have a great hike or great walk with the dog. Say hello to the dog for me. Bing He, good seeing you. Hope you're doing well. Have a good day in Singapore. Mount Doji, good seeing you, my friend. And yeah, let's watch that con and see what happens. CON. And congratulations on your COR trade. Really great trade. You're like a master looking for these V1s, V2s. Really glad. Steve Burns, good seeing you, my friend. Thank you so much for coming by. We always appreciate it. I know all of us do. So thank you very much. And I enjoyed your weekly newsletter last night. I watch it every day, or every time it comes out. It comes out 3 times. If you guys are not familiar, on newtraderu.com, that's Steve's website, and he has a service that 3 times a week he does an analysis of the market. It's here, weekly video newsletter. I do subscribe to it. I think it's extremely valuable. I don't miss it. So it's at newtraderu.com in case you want to check it out. But I watch it every time it is out. I think it's very important. Kurt, good seeing you, my friend. Let me know when you have a trade. I'm really interested in your first trade. See what your analysis is and see what they are, because I'd like to track them. But thank you, my friend, for coming. John Cortez, good seeing you. Hope that answered your question on the stock list of why I use it. And Toby Petty, thank you, my friend. If you ever have any questions in the future, you just please let me know as well. Okay. So, all right, well, that's it for today, guys. I'm going to get out of here, go for a hike, and get some food and get ready for my lesson. So have a great day. Go out and do something nice for somebody. And if you haven't hit that thumbs up button, I would appreciate that as well. So take care, everybody, and hopefully see you guys tomorrow. Bye-bye now. U.S. government required disclaimer. Stock, options, futures, and forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation, and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind, which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.